the way a true lender would have done this, and this is how you build a relationship with everybody, is that you got to put yourself in the position where everybody has safety. So you have to be able to say, hey, tell me the terms of the deal. Tell me what you're lending it for. Show me your ability to repay it. All right, tribe, welcome back to a discussion around how do we become financially free, and what is one of those ways that these coaches are able to build passive income in a very alternative strategy. We love the idea of becoming your own banker, and you've heard us talk about that lots on the show. If you have not, you want to access to our free guidebook, go to wealthwithoutwallstreet.com/PIOS. That stands for the Passive Income Operating System. It is the only way that I know how to, on autopilot, turn active income into passive income. Go to wealthwithoutwallstreet.com/PIOS. All right, gentlemen, we're involved in all sort of different wealth building strategies. Why do you believe today's topic, private lending, is one of the most powerful passive income tools? Stallion, I'll let you go first.
Man, at the end of the day, private lending is the original. It's the OG passive income. But I want to add one caveat. Only if it lines up with your investor DNA, right? If you don't know what your investor DNA is, go do yourself a favor. Whenever you've downloaded the passive income operating system, go ahead and click on that link to take your own personality profile, because the investment itself doesn't matter if it doesn't align with who you are. But man, when it does align, like I'm a high S, I love private lending. It's the get rich slow scheme. It's more hands off than anything else. And man, you get collateral behind it. There's all sorts of really good things about it we're going to dive into, but man, just go with the original. That's what I said. If you've listened to our show for any length of time, you've heard us talk about infinite banking and how we were able to use that concept to create over $50,000 a month in passive income. But it's just not that easy to figure out, how does this all connect into my own personal system?
Stallion, that's why we created the Passive Income Operating System, bro. It shows you how to turn active income into passive income. It makes all the steps come together. If you would like to get access to it as a podcast listener, we've never given this away in public before, go to wealthwithoutwallstreet.com/PIOS.
All right, coming your way, Mr. Incredible, JD Hill. Thank you for coming back. Good to see you again. What do you think is the biggest misconception people have when they hear about private lending, maybe for the first time?
One, I think that it's inherently risky, or that it's kind of this shady, black alley type deal with no oversight. When in reality, private lending is just a loan from an individual or a group rather than a bank. There's usually clear terms, there's legal protections in place. Like it can be pretty safe, but I think a lot of times people assume it's somewhat of a free for all, because it's less regulated like traditional banking or like mutual funds and those types of things. But, real private lenders usually operate with contracts, with collateral, with due diligence, all those types of things. And so I think because it's kind of a mixed bag, people can often think like, I want to stay away from this because I don't want to have, money basically stolen from me.
No doubt. All right, tribe, we're going to jump into this topic. I want to break it down into three big topics, kind of big ideas here. What is private lending? I think that's important for us to understand kind of the components. How do we get started if this is something that we want to do? And then what are some of the big lessons? Really quickly, just for everybody listening, why is it that we're able to talk on this? So Stallion, give a quick background. What have you done so far in the private lending space? And then I want to ask you some more specific questions.
Obviously, my background was in the mortgage business, so I was trained to think about underwriting deals, most specifically on mortgages. But it really just gave me an overall education around what is a good risk, what sort of collateral to look for, what sort of documentation needs to be put in place, so on and so forth. I've done private lending on a vehicle multiple times. I've done private lending on retail products, which I do not recommend. Please do not listen to this and do that. I've done private lending on 2 individual homes. And and I lend to my family for various different things that we do in the passive income space.
All right. Man, I feel remiss Mr. Real Estate himself sitting over here in the corner. I got baby in the corner, got all that expertise. I mean, he doing more deals in the hard money space than most of us. Jamie, Brian, what sort of background do you have in this? And why are you able to talk about it, you think?
Yeah, absolutely. Well, I love this space. I first learned about private lending as a borrower, actually, as I was trying to grow my real estate portfolio. Somebody said, "Hey, if you want to move faster, why don't you use other people's money to do that, right? Give them a great return on their investment. Let them come in as a capital partner on your deals." And so once I started using other people's money, I realized that I freed up some money. And so I understood real estate. I understood how to underwrite and analyze a deal. And so I wanted to start putting that money to work. And so similar to Joey, I've lent on a few different things, including real estate projects, have done a few small business loans, and currently work with a hard money lending group to help connect lenders with borrowers. So doing that very actively and love the space.
I love that. How about for you, John David?
Very similar to Jamie, I started investing using OPM, other people's money, and going out and asking people to lend to me. And then, as that continued to scale and grow, I was like, you know what? I kind of want to do this with someone else. And so I helped some friends kind of start a land business and fronted some capital to go make all that happen in exchange for, a higher percentage of the equity in the company, because it was my capital involved. So I've been involved in probably 250, 300 plus real estate transactions over the past 4 or 5 years. And most of that has been with using private money.
All right. Keeping you while you're hot here, what exactly is private lending and how does it work?
Yeah, so private lending is essentially an agreement between private parties, almost like a bank, right? You literally become the bank. And so how it typically works is, say, this is probably the easy analogy for me because I've done this so many times. Say you're going to flip a house. And it's interesting because I actually use Facebook to make a post about this because we're scaling our house flipping company. We needed some extra cash to lend on. And so I asked people to lend to us and we got a number of responses. But say we're flipping a house and you need some money to cover the gap. So for example, let's say you're going to put $50,000 down on this piece of property and there's going to be $50,000 worth of repairs. Right. Well, let's say you only have $50,000. You don't have the other 50 for the repairs, one or the other, the down payment or the repairs. I could come to you or Jamie or to Joey and say, hey, would you be willing to lend me $50,000 to provide that cash? And in return, I promise to pay a stated rate of return or stated interest rates in exchange for collateral on the house. And so that's essentially how that works. So two private people come together, they make an agreement. There's usually collateral involved. We'd sign a contract. You'd get a stated interest rate. And then I would be able to do the deal. And if the deal didn't work, you would be able to basically get me out of that house for my share because you're ahead of me as a debtor or a lender in the deal.
Okay. Joey, some label private lending as kind of the true mailbox money, right? Why is this such a powerful strategy?
Well, let me give a caveat to that and say it is mailbox money once you've done the due diligence on the front end. There is no 100% passive lending activity when your active part in any deal is understanding the parameters of the deal. Who's involved? Who's the borrower? What's the collateral like? Is it something that you would ever want to get back if it went bad? What are the documentation that has to be included to protect you? Those are some very key things. I don't want to make light of this, especially if you're a beginner thinking about private lending. There are some things to do, but once that is in place, it is constantly making you money while you sleep. And there's something really powerful because it's scalable in the sense that if I can do it once, I can do it multiple times with a lot of times, like what JD was just saying, in the same sort of asset type. So I can borrow some of that understanding and just keep applying it. And then the other thing I'd say from making it really passive is there's servicing companies, people that you can put in between you and that borrower that can manage all of the payments that are received, and they follow up and they do the taxes and all the things that need to go around this. So there's infrastructure that you can borrow to make this even more passive.
Jamie, I know there's a ton of different ways to structure private loans. Kind of break some of that down for us, kind of on the base level, because there's secured, there's unsecured, there's amortized versus interest only. There's long-term deals, short-term deals. Talk a little bit about that.
Yeah, I mean, the fun part about private lending is it's to JD's point, is two individual people coming together and negotiating a deal, something that works best for both parties. So the fun part is everything's negotiable. But as we've said on here many times, the golden rule applies in this case. He who has the goals makes the rules, right? So some things to think about, though, you mentioned is there going to be collateral? Is the loan going to be secured with collateral, or is it going to be unsecured? Are you just going to accept maybe a personal guarantee or no guarantee that you're going to get your money back, right? You need to think about the interest rate. How much money do you want to earn on your money, and for how long of a period of time? Is there a guaranteed minimum interest that you want to put in there? Is the loan interest only or amortized? Meaning, are you going to receive payments monthly, just interest payments, or are you going to spread out the principal and interest over the a period of time? Or even a third option is it just a balloon payment? Are you getting everything, your principal and interest, back after a certain period of time on the loan as well, right? And so all of those things are important little pieces, and that sounds like a lot for somebody just hearing about this, but it's all just negotiable. You get to figure that out, decide what you want, what you're comfortable with, what kind of asset you want to lend on, and what you want those rates to be, and then go into the marketplace and find somebody that has that asset that needs money to use in their business.
I want to speak specifically to you. You were talking about it's fun because you can kind of create what you want. So if you're watching on YouTube right now, we have an ebook, really more of a success story around just a private deal that we did. And we give a lot of details in here. So it's not meant to say, go copy this model, but it's more to create an idea of what's possible. Our mentor, Nelson Nash, created a book called Infinite Banking, and or a concept called Infinite Banking in the Becoming Your Own Banker book. And he really said it's just up to your imagination of what's possible. And I just remember when Joey and I were doing this kind of private loan, we were using an automobile as the collateral, and we were building out a way for this individual to basically meet the need that they had, and then creating structures and terms around the deal based upon their cash flow, the potential to repay it, and also our ability as capitalists to avoid any, rules governing, the how much you could charge and all the things like that. So we're doing everything we possibly can. So if you're interested in this guidebook and kind of this case study where we break down how we lent against the car, how we actually structured the deal to where our return ended up in the, I don't know, 25-30% range. And actually, if you consider the fact that we're using infinite banking, it got significantly greater than that. If you go to Instagram, look at Wealth Without Wall Street, hit the follow button, by the way. We need more followers in there. But DM us the word private lending. I'll send this to you so you can have access to it. And just one of those strategies, because the creativity that you used in this stallion was so amazing. The way that we were able to build a structure that gave them a low monthly cash flow, but then had these basically bonus amounts. Like the longer they went, the higher the payments were. And so we kept being collateralized along the way. And the return was great. It was so great that the person came back multiple times to do the deal with us, right?
Yeah, that's when you've done something, is when they come back for more, and it's a win-win across the board. So yeah, for sure.
All right. So we talked a little bit about what is private lending. I want to kind of jump into now, how do you get started doing that? So like, what is maybe one of those first steps someone should take before they do their first private loan? Jody, you want to answer that?
Yeah, the first step, in my opinion, would be you got to figure out how much money you're comfortable lending, right? Without jeopardizing your financial house. You can't just, bet the farm on a particular opportunity your first time. That's a quick way to potentially lose everything, right? The other thing you need to consider too is, what are you knowledgeable about? Right? You don't generally need hundreds of thousands or millions of dollars to be able to do private lending. Right? You can do private lending with as little as $5,000 to $10,000. I've seen that done before in the real estate space. People will ask for lending for what's known as earnest money deposit, right? So for that first amount of money that you're going to put down to buy a house, right? You can get lending for that, or you can do lending for that. But the first thing is how much money are you comfortable lending? What are you knowledgeable about, and what do you have experience in? you don't have much knowledge or experience, it's free. YouTube and AI will teach you everything you need to know in any particular space. It's incredible now, the resources that we have available to us. And then if nothing else, start thinking like the bank. The largest lending institutions in the world are banks, right? And banks love to lend against things that have collateral. Things that if something goes south, I can trade it in to get some value back, right? Those are generally going to be lower risk, so your returns are going to be lower, which is fine when you're just getting started. Other people will lend on businesses, right? But there's certainly less collateral. So, if I were to kind of summarize all of that, is figure out how much you're comfortable with. What are you knowledge about? Go learn, right? And then start thinking like the bank thinks.
I love that. Stallion, I would say that probably someone listening who's never done a private loan before might have reservations around, where do I start? Like, who do I lend to? How do I know it's going to be a safe bet? All of those things. Talk a little bit about, how do you find these people, these solid borrowers, if you will, and know if it's a trustworthy deal to do?
Well, first of all, I think one of my love languages is networking, and just putting it out to the world. Like, hey, I've got some capital I'm looking to get at work, and who do you know that's meets this criteria? Now, I would throw out what you are looking to lend against, because otherwise, opportunities find cash. And I didn't mean good opportunities, not always. It's just opportunities. So you start throwing it out there that you got money to lend, and everybody is going to throw something at you. Just test me on this, I promise. But make sure that you're doing some of the things that JD and Jamie have also mentioned when you do this, because you're going to have to start filtering through and protecting yourself in the event that you do want to actually take some of these deals down. Because I'm telling you, there's always a need for capital in the market. And so just put it out to the world.
There was nothing worse than walking into class when you're in school and the teacher saying, "Pop quiz day." Why? Because you were unprepared. Are you unprepared, though, for financial freedom?
Don't be. Find out how close you are by taking our 30-second quiz at wealthwithoutwallstreet.com/quiz.
Tribe, if you're still searching for what is going to be that passive income source that's going to push you over the hump, it's going to help you become financially free, head over to the Art of Passive Income podcast, where our friend Mark Podolsky breaks down his amazing land flipping method.
You've heard us talk about how this one strategy has created over $30,000 a month in passive income for Russ and I. Do yourself a favor, wherever you listen to podcasts, go hit the subscribe button to the Art of Passive Income podcast today.
You talked about a second ago, you've done deals with homes, with retail, with cars. And the retail deal, I'm assuming that somebody heard that Joey lends money, and that's how you got suckered in on that deal. And even as a bad of a deal it was, you ended up getting your money back, didn't you?
I did. I actually, made a decent return on it. But the sleepless nights and the sweats that came with it, I would have gladly traded those back for doing a better deal.
Oh man. And the abuse you took in the office for doing that deal. That was probably really the big thing. All right. Jamie, coming to you, man. Tell me, so risk obviously can be a big concern, especially for first-time people. What are some of the key ways, in your opinion, to protect their money when they're lending it?
Yeah, I mean, absolutely. There's risk in any investment we make, right? But I think there are ways in private lending to mitigate or make an educated decision around risk. And one of those is, how is that loan collateralized, right? I'm big on collateral. I want some sort of collateral that's going to, at minimum, be of value, hopefully greater value than the amount of money that I've lent to somebody. Another thing is personal guarantees. A lot of times in this space, we're lending to businesses, right? So how are you guaranteeing that personally? Are you getting a personal guarantee from the owner of that business should something happen and the business goes belly up, declares bankruptcy or something along those lines? Can you guarantee that you have another avenue to kind of recoup your money? Do you know how to underwrite a deal? Back to one of JD's key points of like, what do you have experience? What do you understand? What have you done? Do do you have the tools necessary and the knowledge necessary to underwrite the deal? I do a lot of this in the real estate space. Do you know what makes a good real estate deal and what doesn't? How comfortable are you with the area of town or, the city or state that you're lending in, and kind of what are those metrics? So understanding what makes a good deal or opportunity, I think, is important. And, protecting yourself if you want to get into this space and you don't know these things. It may be as simple as Joey's point, networking, finding somebody who does know this information and tagging along to learn.
Great point, Jamie. Russ, I'm going to kick it over to you because I know that you've had some work with private lenders. You know how important relationships are in the space. How do you build trust as a lender?
Yeah, I think, well, I'm just going to put myself on the other side. So, like, when you're trying to figure out how to do anything, just put yourself on the other side of it. It's the easiest way to know if it's right. Like, if you're doing a deal for someone else, would you be willing to accept that same deal, right? You're in their circumstances, would you be willing to do the same deals? I think the way you build rapport there is you find out the situation. You should not be lending to people who need money. You should be lending to people who want money. And there's a key difference there. If you don't know what the difference is, you'll figure out quickly you didn't give a loan, you gave a gift. And that's what happens a lot of times in families. I think when we talk about relationships, most of the time, a lot of the experience people have in private lending happen in the realm of the family, right? Oh, brother-in-law comes to you. Hey, I'm in a little pinch. Is there a way that maybe you'd be willing to do a loan to me for, 20 grand? Well, I want to help you out. Here's the deal. But that doesn't sound like a loan. That sounds like a gift, right? Because the way a true lender would have done this, and this is how you build a relationship with everybody, is that you got to put yourself in the position where everybody has safety. So you have to be able to say, hey, tell me the terms of the deal. Tell me what you're lending it for. Show me your ability to repay it, right? What in the event that you can't repay it, how are we going to proceed from there? And that's what banks do, right? Banks don't do bad deals. They protect themselves. As a lender, you should be doing the same exact thing. That's how you build trust, is that you create a repeatable process for people who are going to come and borrow money from you. They know exactly what they're going to get. We're not talking about loan sharking, right? Nobody's going to show up with a crowbar and, break some kneecaps if somebody doesn't pay. No, you're going to show up and pick up the car, pick up the, you're going to, foreclose on the house. You're going to do whatever the thing is that you said you were going to do in the paperwork that they signed if they don't pay. That's how you build trust, is that you do what you say you're going to do and you communicate along the way. All right. So this is we talked a little bit about what is private lending. How do you get started? Now let's talk about some of those big lessons. JD, talk about a mistake maybe you made early on in your private lending journey, and what did you do, or how did you learn from it maybe?
As somebody that's been on, both sides, the thing that's I find interesting that often comes up, a lot is, what's your track record, right? Like if you've never done a deal, be candid and honest about it, right? But share what you do know about what you're doing. I'm a part of this mastermind. I've done this. I know these people, right? Like, share what you know. But track record is so important. There was, I wasn't on, so I'll share about an opportunity that we actually passed on to basically be the funder for this particular deal. There was an individual that was looking to raise some money to buy land in Texas to subdivide it, which is the space that I play in, right? That's what we do. And as the pro forma, like any pro forma, looked incredible, right? It's like 3 or 4x. And obviously I'm, bright eyed and I'm like, this is amazing. But as you start digging into it and looking at comps, you start looking at specific data in that particular area, to see if things are going to check out. And there were some problems that certainly jumped off at us as we were going through that process, and all the boxes just didn't get checked. But one of the big ones was also the track record piece, right? The track record piece wasn't there either. And I think sometimes you can compensate for that as well, to say, look, if all the boxes don't necessarily check maybe on the deal, but I trust the track record because you've been in a situation like this before. Maybe you have specific, understanding or experience in that area, right? So for example, I don't have specific experience in Birmingham, Alabama. So I could look at data and be agnostic to the data, but Jamie could say, no, there's a specific pocket in Birmingham that's on fire, right? Well, that's not necessarily going to show up on what I'm looking at, right? much like in Texas, there are pockets in Dallas that I know so much about, right? And so long and short of that, we ended up passing on the deal. Well, it's been almost a year and they still haven't sold a lot, right? And I know some of the people that got involved on the back ends of that particular project, and their money is stuck until they can, sell that particular deal. Now, it's an asset. There's value there, so they're not belly up or anything like that. But it's certainly a situation where you thought you were going to get money back at a particular time, and now it's taking longer than was originally anticipated. And so that's, certainly something that I've learned from, and being okay to just say no. Like, it's okay to pass on a particular deal.
Joey, I think sometimes people can get in this space because they have the allure of high returns. You see things like, oh, I'm charging 13% annualized returns, maybe with 2 or 3 points up front, maybe some other miscellaneous fees. And they think this is a way for me to earn 15, 16, 17% really easy. Why could that be a trap for new lenders?
And just based on what JD just said, I'll kind of just piggyback. But man, in the private lending space, high returns typically involve higher risk or unnecessary risk. In fact, I will tell you, when someone really needs money, they're desperate, they're going to promise you really high returns because they've already been turned down at multiple other places, or the deal, because either they themselves are a bad risk, or the collateral or the project that they're trying to do has some holes in it, like JD just mentioned. And if you're a new lender and you're getting promised these really big things, I don't mean to bust your bubble or your ego, but there's a reason why they're coming to talk to you. And you need to run the other way because money is way too cheap in the marketplace. So if you're getting this overly rich offer from somebody like, hey man, I promise I'll get this to you in 30 days and blah, 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 there's a reason. So just be careful about falling into that trap.
Well, here's a good lesson or good, upgrade to your vocabulary, that's saying a lot coming from a guy who's struggling with the vocabulary, right?
You say vocabulary.
If you're going to get in the private lending game, add these words to your repertoire. Secondary collateral. What else? What else do you have that we can add onto the list, right? Like I had a guy that told me he did a deal and he's like, man, this guy would rather separate from his family than lose this deal. Like he did $100,000 loan on a paid off building that was worth about a $1.5 million that had a 10-year long-term lease with a Class A tenant that was just paying like clockwork. He's like, man, he goes, I kept hoping that he was going to default on the deal. I wanted that building. He's like, thing was money. So secondary collateral, I think, is one of the things you're looking for. You need to be backed up. And then what is your ability to actually go get it, right? You need to understand some of those things. So I think that's probably maybe a discussion that you could kind of chime in there, Jamie, or some of the, the legal and financial things that people need to know as well as to avoid the headaches from.
Yeah, well, not an attorney, right? So one of my first steps is involve an attorney, right? Make sure that you have somebody looking over all the legal documents, that everything is up to par and is written out like it should be. And make sure you're very, very clear on terms, right? Make sure you're clear. Make sure the borrower is clear. Make sure that is crystal clear and outlined in the legal documents. Thinking about specifically lending on real estate, I think you need to understand, to your point, Russ, how am I going to go get that property if I need to? Understand the foreclosure process in each individual state, or understand what it takes to repo that car if you lend on that. Make sure you understand how you can get that collateral, how you can actually get your hands on it. I also, if in the real estate space, I like to be listed as the additional insured or loss payee on the insurance policy. I want to make sure that is included, meaning if the house were to burn down, where is the insurance company going to send that money first? I want to be first paid on my loan to make sure that is all covered. So I would say, again, make sure that you are connected with people who know exactly what's going on. If you don't know all the answers, ask questions, right? Make sure you're asking the attorney, did I cover everything that you think needs to be covered? And make sure that it's all documented, signed, and agreed to by both parties.
All right. Well, this has been good. Let's leave everybody with maybe just one thing they should do this week if they want to move forward with the private lending strategy as a way to become financially free. JD, what's your one thing?
Reach out to me directly. No. Reach out to me directly. No, I mean, but seriously, I think you gotta let people know. Like, nobody knows that you're wanting to do this if you don't let people know. I'm not necessarily saying you go to Facebook and turn on Facebook and say, "Hey, I'm willing to lend money," right? Don't do that, because you're gonna get jokers that'll start just beating down your doors trying to claw at that capital. But let people know, whether you're in an investment group or whatever it is, it's important that you share what you're doing, or at least what you're trying to do with other people, and that you're looking to invest alongside them.
All right. Joseph?
Well, I think you've already mentioned our ebook on this, just to give you a case study, like a taste of what private lending could look like. It doesn't mean that all of them look like this, but definitely DM us the word private lending and we'll send that to you. I think that would be a great first step if you're just trying to get your feet wet.
All right. Jamie?
Yeah, absolutely. A little bit different than JD's point, but down the same line. As you were mentioning, you can invest alongside people. I recommend, figure out what you want to invest in and find somebody who maybe has experience in that space if you don't, right? So make sure you find somebody who has done it and has an experienced network and understands what is going on. If you're brand new to the space, I think that's vitally important.
Here's one of the things, this is just stealing it from one of the podcast guests we've had on that recently talked about this, is you need to have your own investor buy box around this topic. You need to know exactly the type of assets that you want to lend on, exactly the location of where they're going to be, how much are they going to be, what's the collateral, what's the experience of the person that you're going to be lending to. Do you have all the legal paperwork? Do you know exactly the guidelines revolving around that? So if you build kind of your investor buy box around this strategy, that would be the first thing I would do. I would just sit down and draw that up and have it perfectly tight. Because here's what's happened is when you start if you start doing what Jamie and what Joey and what JD said, letting people know that you want to lend money, people are going to start coming to you, and then emotion is going to get involved. You want to be objective, not subjective when you're doing these deals. And then that gives you the freedom to say no to everyone that doesn't fit your criteria. And also, I'm going to give you another little upgrade hack. When you start doing deals, one of the hardest things to do is to say no, not necessarily because you don't want to do the deal, but because you're afraid of hurting the person's feelings. So a friend of mine told me this, and I've used it, which is such a great thing, is when somebody hits you up and they say, "Hey, JD, I hear that you're lending money. I got this deal and blah, blah, blah." They tell you about it. You say, "Man, that is so awesome. I created a limit to how many deals I was going to do this year so far, and I've already hit that criteria. So I would love to do it, but kind of as a promise to myself, I'm going to wait until next quarter, next year, whatever the time frame is." And nobody will push you on that. They'll be like, "Oh, you created this kind of catch to yourself. You're being honest to yourself." That's an easier way to say no, just as a little upgrade hack. And I've used that a couple of times. It's perfect. All right, tribe, if you found value, take a little time, share this with somebody. The algorithm gives us benefit when they see it being shared and new people joining the podcast. We're well on the way to hitting 2 million downloads. And the only reason that matters is because it means somebody's listening. It means this must be helping you. And we want to continue on our journey to help you become financially free and get there as fast as possible. Have an amazing day.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand so that your wealth will never run dry. See you next episode.